Let's take a look at all things money matters now. The rand has weakened to a 2-week low today, while the JSE tracked its global peers lower as investors grappled with the ongoing Russia-Ukraine conflict. The local currency fell to an intraday worst of 15 Rand 37 against the US dollar from 14 Rand 92 that was reached last Friday. For more comprehensive analysis of what is driving market sentiments, we are joined now by Matete Thulare, head of foreign exchange execution at Rand Merchant Bank. Thank you very much for availing yourself this afternoon. So it's no longer an imminent threat. Some reports suggest that this is a full-scale invasion by Russia to Ukraine. Perhaps let's start with a sense of how the local currency is reacting.
Good afternoon, Juju. I suppose the initial market reaction has been sharp, but not really enormous. I mean, as you said, the rand has weakened about close to 40 cents this morning over the past 6 hours worth of trading from around 6 o'clock this morning. And I suppose we're weakening for a second day. And as you said, I mean, we're touching our worst level versus the dollar in about 2 weeks. And I think the market is really watching headlines on this unfolding situation between Russia and Ukraine. I mean, we already know that later this afternoon, the UN is going to be holding an emergency meeting. And on the back of that, President Joe Biden will also be speaking in the US afternoon time. That time we're still waiting for. So markets will be really anxious. And I suppose we are going to be trading on uncertainty, and this means potentially more spikes in the currency should the situation worsen. And I suppose further losses in the rand market will be really dependent on extent of Russia's moves and what they really do in the next few hours. But I suppose if you just look at it also, the silver lining, despite this doom and gloom, is the fact that gold, PGM prices have also jumped, and we're also expecting a follow-through in the iron ore and coal market as well.
Let's expand on commodity prices having quite a day already. Let's expand on the moves driving that.
Yeah, so look, I think the 4 major precious metals have all advanced following yesterday's attack on Ukraine, and that's boosted the demand for havens. And also it's potentially threatening the supplies. I mean, already gold has increased about 2%. That's now trading at the highest level since January 2021. The likes of palladium, that's also trading at around $2,500 an ounce. And I mean, that's the highest since August 2017. So that's close to 5-year highs, as well as Brent. I mean, that's also now surged past $100 a barrel for the first time since 2014. And I think that's also now raising the alarm that, you know, Brent could potentially now start heading towards 120. And that would obviously add inflationary pressures to the global economy. Now, you know, the surge in oil has, you know, had a broader rally in the commodity markets. That's also swept up natural gas. I mean, some of the drivers besides the attack on Ukraine, it's, you know, just a post-lockdown resurgence in worldwide demand. That's also coupled with this geopolitical tension. But also, I suppose energy exporters, you know, they're really going to benefit from the boom, and the oil's influence on economies isn't what it was before. I mean, most of the world has taken a hit as companies and consumers find their bills rising, and obviously their spending power has been reduced. But I mean, if you look at some of the countries that will be benefiting from all of this, it's the likes of Saudi Arabia. Russia will be also benefiting from this, and even the small oil exporters such as the United Arab Emirates. But I suppose the biggest losers in all of this would be energy importers such as Korea, India, Japan, even ourselves locally. That's also going to filter through into the inflation basket. And I suppose it's also going to mean Lesotho and team at the Reserve Bank are going to be scratching their heads, especially since this means that potentially inflationary pressures will be rising. We could see ourselves out of that 3 to 6, inflation gap that they usually monitor, and potentially could mean that we could have a higher than 25 basis point increase in interest rates next month when the central bank sits down and gives us their decision.
Let's take a look at company news. AB InBev publishing its 4th quarter and full year 2021 results. How would you assess their performance?
So remember, AB InBev is a Belgium-based brewer. They're the world's largest brewer, and obviously they've come out to say that profit will increase this year in line with their medium-term growth range, and after ending 2021 with stronger results than what they initially expected. I mean, they have noted that a recovery in demand in key markets such as ourselves have helped them deliver core profits. I mean, that's, exceeding management's expectations in 2021. Remember, they are the guys that, produce the likes of Budweiser, Corona, Stella Artois, and they've said that their EBITDA would rise between 4 and 8%. This would be based on a combination of both higher volumes and also prices. Now, they've noted that the forecast reflected obviously would also include their views in terms of how the pandemic has played itself out. But I suppose, also they are noting the fact that in South Africa, the volume, the revenue and operating profits have actually grown by double digits year on year. So it will be quite interesting, especially given the fact that yesterday, even Enoch Godongwane, delivering his maiden budget speech, has also increased sin taxes. But that obviously, I think would be something that they'll have already factored into their numbers for the coming year.
Let's take a look at more results. Anglo American reporting their year ending 31 December 2021. How did they perform?
So Anglo American, which is a global miner, I mean, they've posted record full-year earnings. That's helped by bumper commodity prices, as we've seen. And obviously, those commodity prices, that's also factored through into the budget also yesterday with Minister Godongwane, noting the revenue that has came through from the mining sector. But also, Anglo has been also boosted by shareholder payouts to the tune of around $6.2 billion. I mean, they have noted that their EBITDA has rose to $20.6 billion in the year of 2021. That's up from around $10 billion the previous year. And, it's much in line with the average forecast that we had of around $20.5 billion. The other nice thing about, a lot of the mining companies is the fact that they are reducing quite a lot of their debts. So they have noted that net debt for this coming year will be slightly lower. I mean, that's around $3.8 billion where they, forecasting to end 2021. But they've also noted that, copper, PGMs, which are essential to the global decarbonization project, that's also now helped them because obviously it's supported by an improving market for diamonds that's already contributed to a record financial performance. So I suppose Angro's results are the last of a bumper earnings season that we saw. Even the rivals such as the Rio Tinto, BHP, they've also had bumper returns and they've also generated significant returns to shareholders in terms of dividends. So I suppose, it's not all doom and gloom. I suppose there's a few companies that are doing well despite everything that's happening, despite the geopolitical tension and obviously what we're seeing in terms of COVID-19. So the mining sector is still continuing to perform well. And I suppose that factor will obviously filter through into, also our budget numbers into the latter part of the year when we deliver the medium-term budget in October.
You speak of the mining sector driving growth. How long can or how sustainable is that?
How long is a piece of rope? So I suppose, it's like even today, I mean, despite all what's happening in global markets at this point in time, only the mining houses, even the likes of Sasol are doing well. So, I mean, we've seen this throughout even the COVID-19 pandemic where we've seen the likes of, the gold price rallying quite significantly, PGMs doing well. With the whole global decarbonization project, we are still going to need some of those precious metals and obviously some of the fossil fuels, the likes of coal won't go out at this point in time. It's going to be a bit of a phase before we get them out. And obviously, with the amount of geopolitical tension that's coming on board, I mean, it could be, quite an interesting and bumper time for the mining houses. So, despite all the doom and gloom, they are still doing well. They are expanding. They are also reducing debt. So, for me, that also signifies the fact that a lot of the mining houses are doing well, and that it is being noted in their results, and it is filtered through into our revenue base. So I suppose, for now, let's enjoy the good whilst it still lasts.
Absolutely. Matete Thulare, Head of Foreign Exchange Execution at Rand Merchant Bank. Thank you.